Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.
As far as charting software is concerned, what I recommend is that, if you're somebody that's just starting out in this, trading options and trading these ISEFX options, try to make the best use of the charting software that's available through your broker, because generally you're not going to pay a monthly fee to access that software. There are a lot of different trading softwares available out there. eSignal, the Q charts. Which are owned by the same company. There's a lot of other different charting packages available out there that you would pay for on a monthly basis. But I think that if you can just learn to use the software that's integrated into your broker's platform, particularly if you're using Options Express as an example, you realistically don't have to go anywhere else for your charting. For us here at the office, those snapshots are from Q charts, but we take things to a little bit of a different level. We have a number of different presentations that we need to do and prepare for, and so we need a charting software that is much more versatile from a presentation perspective. From a day-to-day trading perspective, the Options Express charting software, for example, is perfectly fine.
Thanks, Jason. I'm going to take this one, and then we'll go on there. I see a couple more about liquidity and the ability to trade these options. And my answer to that is, even though the open interest is actually very small and a lot of different strike prices, the bid-ask spreads are extremely tight. And I'm actually looking at the no 104 calls and puts. The calls closed at a 4-cent wide bid-ask spread, and the puts closed at a 6-cent wide bid-ask spread. So, there are so many opportunities to trade these. And the reason you're probably wondering, you read books about you only want to go to a place where the open interest is large. Well, because, as Jay said, that we trade trillions of dollars each day in the currency markets, that the market makers can hedge this very easily. This is a relatively new product, but you can get in and get out with relatively ease. And you just take a look at the bid-ask spread. You might want to use a virtual trade. A lot of brokers have that to learn and just experiment a bit. But I think that you'll be able to get in and out of these things relatively easy. But again, keep your eyes out and do some homework yourself. David has a question about average true range. Does it help determine the trend, and does it expand or contract when we have uptrends and downtrends?
Basically, what it's doing is it's just telling us the scope of the move over a certain period of time. So, if a particular pair value has been averaging over 1 month a 1-point move, or versus a 1 cent move, it's going to give us an idea as to the volatility of that particular pair value. And so what it does is it essentially gives you a little bit of insight as to when we buy these option contracts over the course of a certain period of time, how much could we expect that option contract, that underlying, to move. But I don't think that it's although it's classified as a sort of a trend type indicator, I don't think that it's as effective as your MACD or even as your moving averages in establishing the trend. I think it's good for determining just how much that pair value has been moving over a certain period of time, and then giving you a sort of a benchmark to judge, what options to choose, what expiration month, and so on and so forth to participate with.
Good point. Beth has a question that I don't think, Jace, there's an easy answer to. In fact, I'm going to have a preface to this, but then I'll look for your viewpoint. Personally, she says, if you don't mind asking, what would you say, what percentage of the trades are you profitable on? And first of all, I'd like to say that it's probably very difficult to to actually give a percentage. Just think of it this way, that options are about risk reward. So if you want trades that are very likely that you'll be successful, well, then your returns are going to be much smaller. And if you're looking for low probability trades, well, then your returns, if you're successful, are going to be much higher. So you've got to probably select what kind of trader you are. Chase, what's your viewpoint on that?
Well, you know what, and I mean, it's very subjective as well. In fact, we were teaching a class in the office here today, and one of the major points that I made with the folks today is the fact that traditionally most people come from a buy and hold mentality. So in other words, they may very well be profitable source for a certain period of time, but then they're somewhat greedy, and then those profits disappear. But they sit back and they say, well, you know what? I can in fact hold on to this. I believe it's going to keep going up in value, and so goes the story. When you're trading with options, you may find yourself in a profitable position, but unless you pull the trigger to lock those profits in, you may find that option contract was profitable, but then ultimately ends up expiring worthless. So the question you ask yourself is, was that a profitable trade or was it a losing trade? Well, it was a profitable trade at one point. What made it a losing trade is that the individual neglected to take those profits, and ultimately the options expired worthless. And so, the percentage profitable trades is going to be dependent on whether or not you're in a position to take those profits when the market is giving them to you. Finding your entry points and taking advantage of particular directional bias is one thing, but when we enter, we don't know how far and how profitable that position is going to be, and so we need to take steps like moving our stops. I mean, and now we're getting into an entirely different webinar, seminar altogether. But your profitability is going to depend on just how well you're managing those positions and how effectively and patient you're entering, and how patient you are with your entries.
Great answer, Chase. Karen has a question about your moving averages. Do you have a preferred, 1334 or whatever, 5079 or whatever?
Sure. You know what? Because I don't really rely on them for trading, we tend to use 8 and 21 as just the moving averages of choice that we put up on the apply to the actual price chart themselves. But the thing with moving averages is if you're somebody that is not looking for strategic entries, if you're looking at it from a more just a trend identification perspective, then your moving averages are going to be a way that you can kind of step back and just glean a particular direction, I guess, over the bigger picture. If you're looking for specific trade entry opportunities, I like to one way that I screen the market for trade opportunities is by looking for MACD crossovers, because that 1226 setting, which is your common setting with the 9-bar signal line, will generally precede any big move. So you'll tend to see that crossover first. Then you can get in and you can decide whether or not it's an appropriate time to put a trade on, or whether or not, or at least identify a key sort of entry point with that in mind. So 8 and 21 for the moving averages, but I don't use them to manage my trades really at all.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.